Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Global markets on alert as pressure intensifies on President Biden to drop his re-election bid. Some Democrats now see Kamala Harris as an alternative. We'll bring you all the latest. Meanwhile, Asian stocks rally led by tech stocks as soft US economic data back the case for a rate cut. And in an exclusive interview, Ukraine's president challenges Donald Trump to come forward with his plan to end the war with Russia, saying that any proposal must preserve his country's sovereignty. Very good morning. Welcome to the programme. Happy Independence Day if you're stateside. It does mean that US markets are mostly closed this morning, and it also means that trading is pretty thin elsewhere. But if we take a look at the futures picture, flat on both sides of the pond, really. This is after the S&P closed at another record high yesterday, just in time for the holiday, because of that weaker than expected raft of economic data we got feeding into enthusiasm for Fed cuts, and therefore traders reckoning it will fuel corporate America. So the bad news is good news story continuing. But if we flip over to the cross-asset picture, you've got politics continuing to be a theme here in Europe. Euro-dollar at 107, the pound at $1.27 as Britons head to the polls in just under an hour's time, and Brent trading at $86.90. But let's get to the politics, because it is spilling over onto Wall Street. The drumbeat of pressure on Joe Biden to drop out of the presidential race getting ever louder. Biden rapidly losing support of Democrats in Congress, dozens demanding that he withdraw from the presidential race, though the White House denying a New York Times report that he is considering bowing out. For more, we have Kriti Gupta with us in the studio. Kriti, just tell us what we know so far.
Well, I'll give you a wrap of the last 24 hours. To your point, we started off with the New York Times report saying that a key Biden ally suggested that he was weighing dropping out of the race altogether. We also know that just a couple minutes after, we got a tweet from White House spokesperson Andrew Bates. I'm just going to quote him verbatim here. He says, "That claim is absolutely false. If the New York Times had provided us with more than 7 minutes to comment, we would have told them so." So that's going to be the latest we've heard from the White House in terms of pushing back on that report. We also know privately that President Biden and Kamala Harris have been on calls with the DNC. That's the Democratic National Convention Committee. Harris has also privately met with some of her donors in the past as well, which has been interpreted by the media as her perhaps being the front runner or simply rallying behind the funding for the Biden-Harris ticket. That is so far what we know. We also know that President Biden has been, of course, consulting his inner circle about what is best for the Democratic Party. Even though you are seeing these schisms, Lizzie, within the party itself, the one united goal is to make sure this is not a Trump 2.0. And in doing that, President Biden has actively said, according to sources from various media outlets, that he's considering what the scenario might look like for him to drop out. CNN reporting that scenario would mean polls are plummeting, the fundraising is drying, and the interviews are going badly. He says we're not there yet, but that's what it would take.
So is there precedent for this?
There is precedent for this, but it is a rarity. And I think it's only happened 2 times in history where the incumbent has not rerun for a re-election bid, despite them being constitutionally able to do so. The more recent example, I say recent with a giant grain of salt, is going back to the 1960s with Lyndon B. Johnson. So you can see not that recent itself.
Recent in the lifespans of Biden and Trump,
exactly,
perhaps.
What's interesting about this one, and just a quick history lesson for international viewers, Lyndon B. Johnson was the vice president to the very famous John F. Kennedy behind the Cuban Missile Crisis, the Cold War, etc. He inherited the Oval Office after JFK was tragically assassinated as well. He chose not to rerun because his polling numbers were very low as a consequence of not only the Vietnam War, but the Civil Rights Act as well. The parallel you can draw from that to right now is not just the fact that there is 2 wars going on in this region in particular, both of which that the United States has made a very clear choice of which side that they are on, but also that there's a voter participation story behind it. In the civil rights, it was about really making sure you get the minority vote. I would argue it's the same case this time around.
So given that it's US Independence Day, I'm wondering how fast things can move. What are the next steps here?
So it all comes down to tomorrow night, actually, over in the States, because there is a debate happening, or excuse me, a interview happening from ABC's George Stephanopoulos, who is his own presidential advisor, interviewing President Biden. We're going to see what the polling looks like after that. And it looks like not only the Biden administration campaigns are watching that, but the entire DNC is as well. Just about 6 days after that, you've got July 11th, which is when DNC Platform Committee meets. Now, remember, Joe Biden and Kamala Harris have already been in communication with the DNC about whether or not Joe Biden can actually indeed clinch this nomination. But this is all in preparation for a virtual roll call. There's a lot of nitty-gritty legislation happening in Ohio, which means that prior to the actual Democratic National Convention, if Biden wants to be on that ticket, he has to be solidified as the presumptive nominee as early as July 21st. That date is not set in stone, but that's what the next few points look like.
All the nitty-gritty from Critty. We love it. Thank you for that, Bloomberg's Critty Gupta, who is going to be back with us later in the programme before she heads off to the opening trade. But as I mentioned, the debate on whether Joe Biden is going to scrap his run for re-election is also spilling onto Wall Street. You've got betting markets seeing less than a 50% chance he stays a candidate, and investors already making their contingency plans. So let's get more now from Bloomberg MLive's Mark Cranfield. Mark, how is the Trump trade playing out across markets?
In a similar way to how it did when he was first elected, or when he first won the vote in 2016, actually. So after we had the debate last week, one of the first things to happen was a steepening of the US Treasury curve, because that worked out very well. Traders are looking back to 2016 to see what kind of trades worked quickly. And steepening of the Treasury curve was one of those that was very successful, particularly in the first few weeks after the November 2016 vote. After that, once Trump actually got into office, it began to flatten again. But initially, it was definitely a good trade. It's easier this time because the curve was inverted at the point we had the debate last week. So taking off inversions and going towards steepening is certainly an easier trade for people to do than the other way around. So that's helping to fuel it. In turn, when you get something like that, not surprisingly, you get a stronger US dollar, because typically it adds friction to the long end of the curve that supports the currency as well. So those things have certainly happened, not in an enormous way, but they're pretty clear changes since last week. On the other side, equities are continuing to do well in the United States, but they did under Donald Trump for most of the time in office. And he's largely seen as somebody who wouldn't be too bad for the equity market. He doesn't do any harm, particularly if he wants lower taxes as well. So it's really that Treasury trade that is in view, and how much further can people push it until it maybe reaches the inflection point, which is around the flat line curve. And that's still some way to go, but definitely moving in that direction.
OK, so that's a longer-term picture, but we also got a load of economic data yesterday. We've got the jobs report tomorrow, FOMC minutes yesterday. Where does it leave officials on when to cut? How divided are they, Mark?
They're still pretty divided, and it's quite puzzling for investors because these minutes came out, and of course they were from the same meeting where the Federal Reserve lowered their cuts to just one for this year. Their dot plot said there would only be one instead of three beforehand. And yet when you look at the minutes, they were talking about a cooling economy, and they were more concerned about things coming down too quickly. So it doesn't seem to add up. Why did they change the dot plot so much when they're worried about the economy coming towards a slower growth trajectory? So it really doesn't seem to make a lot of sense. Traders are seeing through that. What they're seeing is that the recent data is a bit soft, particularly the ones you mentioned for this week. There's an employment report coming up, which is very important, particularly if the numbers of the unemployment rate goes above 4%. If it goes to, say, 4.1, if you look at some of the way people calculate, and Simon Flint has done a lot of work on this for Bloomberg, if you read on the terminal, you'll see that he triggers this as being one of the recession inputs. So at 4.1, people will start to get a lot more concerned that the United States is moving towards recession, even though it's not obvious right now, and there tends to be a time lag. But people will be watching that unemployment number specifically for anything above 4.
So So you heard of the Psalm rule. We bring you the Simon rule. Bloomberg M Live's Mark Cranfieldy, thank you for that. That's how the politics is spilling into wider markets. But Asian markets, of course, aren't immune to the speculation of a Trump return, which presumably would also knock China equities and Japanese stocks that are exposed to China. But you've also had the optimism for Fed cuts filtering through to today's Asia session. So let's get more on that now with Avril Hong. She's on standby for us in Singapore. Avril, what's happening where you are?
Yeah, Lizzie, I think those developments out of the U.S. are at the back of minds for investors in Chinese assets. The predominant concern is the Federal Reserve's rate path. And given the weak economic data that you've just been discussing with Mark Cranfield, we are seeing those rate cut bets accelerating. That's propping up the infotech sector, this part of the world. Asia's stock gauge at the highest in 2 years. Part of this coming from South Korea, Taiwan stocks, but more importantly, what we're seeing in Japanese equities. Take a look at where the Nikkei and the Topics are sitting. This is the highest since March on the Nikkei. For the Topics, it is already gone past that record closing high from December 1989. In about 50 minutes, we'll find out how it closes and whether it eclipses that previous record from way back when. We are seeing those Chinese equities underperforming today. The Hang Seng erasing pretty strong gains from earlier on in the session. But let's flip the board, talk a bit more about what we're seeing in Japanese equities. It's helped along by those Fed rate cut bets, the cheap Japanese currency, but also corporate governance improvements. And that is also helping to fuel this attention and demand for Japanese financial stocks, the likes of Sumitomo Mitsui, one of the biggest banks in Japan, actually seeing its price-to-book ratio breaching 1. This is not something we typically see on Japanese financial stocks, but it does show you how corporate governance and the unlocking of shareholder value has helped some of these Japanese companies. Let's flip the board again, take a quick look at what we're seeing in Asian currencies. We are seeing that softer dollar today as for much of the week. Flip the board if we can, and you'll see how some of these currencies, including the yen, have been recovering thanks to the slightly softer dollar. Lizzie.
All right, Avril Hong in Singapore, we thank you for the roundup. And we've got a busy day ahead as well. In the UK, at 7 a.m. London time, the polls will open for the UK general election. They're going to stay open until 10 p.m, at which point we'll have an exit poll and the results trickling in from about 11 p.m. onwards throughout the night. I have to say, the weather forecast is looking incredibly grim for tomorrow. So whoever said things could only get wetter was really onto something. We'll have that speech in Downing Street tomorrow. But in the meantime, to keep us occupied, at 10 a.m. London time, we've got the French 10-year bond auction, the last bond sale before the final round of voting, the second since Emmanuel Macron called the snap election, which of course kicked off a major sell-off in French assets. And then at 12:30 p.m. UK time, we'll get the ECB's minutes from the Governing Council's June meeting, which should be tasty, explaining why they cut rates and raised the inflation forecast at the same time. So that's on the docket for today. And you can catch up on all the day's news ahead on the Daybreak newsletter. Just go to DAYB Go. But coming up right here on the programme, we're going to bring you an interview with the Ukrainian President Volodymyr Zelenskiy. He's told Bloomberg that Donald Trump should reveal his plan to quickly end Russia's war in Ukraine. We'll bring you that conversation next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Ukrainian President Volodymyr Zelenskiy says that if Donald Trump has a plan to end the war, he wants to know about it now. The Ukrainian leader spoke exclusively with Bloomberg about the US election race and challenges around agreeing to ceasefires with Russia.
So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million, we're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? We didn't the war even to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
So that was the Ukrainian President Volodymyr Zelensky speaking exclusively to our colleague Anne-Marie Hordern in Kyiv. And for more analysis, we have Bloomberg's EMEA News Director Ros Matheson with me in the studio. Ros, listening to those bold words from Volodymyr Zelensky, who historically has had quite a rough relationship with Donald Trump, do you see any way that he could repair that relationship with Trump?
Well, as you say, they've had a pretty fraught history. Donald Trump has accused Volodymyr Zelensky of corruption over the years. He's been quite contemptuous of the handling of the war, very clear that he doesn't want to continue to support the war from the US side with weapons, with financial aid. But Donald Trump is also, in the end, a businessman. He's quite pragmatic. And so you can see from the conversation yesterday in the interview that Zelensky recognises that, and that there is quite a high prospect that Donald Trump is going to be in the White House come January next year, and that if the war is still going, and all it seems to be that it will still be going, that he's going to have to continue to deal with the US president. And so he's got to find some kind of level of conversation with Donald Trump on that. But again, Donald Trump does what is best for Donald Trump. And if you start from that point, when you're dealing with him, maybe there's some way to navigate a relationship that's beneficial also for Ukraine.
I mean, when Zelensky's so desperate to hear Trump's plan to end the war, does anyone have any idea, military strategists, for example, what that would actually look like?
Well, it's interesting because Donald Trump says he'd end a lot of things quickly also. He would have also ended the war in Gaza pretty quickly, but he doesn't have any plan for that. The only plan seems to be to pull out US military support and financial support. And, of course, that would leave Ukraine very vulnerable to a quick end to the war, because at that point it gives the advantage to Vladimir Putin. I mean, European weapons and aid going in is not going to be enough at that point. So he seems to be indicating that he would do that, or he'd lean on Vladimir Putin to do something. But all of this would seem to be a solution that involves Ukraine giving up territory, giving up a large amount of land in order to end the war. That would seem to be Donald Trump's plan, at least.
They also mentioned a potential deal to send natural gas from Azerbaijan through Ukraine to the rest of Europe. I mean, how much would that help the Ukrainian economy and the war effort? And it feels like a chicken and egg situation, doesn't it? Because you have to have the contracts to get the investment, to get the contracts. Are we anywhere near that? Is it likely to be forthcoming?
Well, it's something we've been hearing about for some months now, and obviously it's because the current transit contract expires at the end of the year and very unlikely, obviously, to be renewed. So Ukraine has to look for alternate sources of gas to supply through Ukraine to Europe to get that money. And so they're looking around and saying, well, that's one prospect for it. But as you say, we're nowhere near getting contracts done. It's only 6 months until the end of the year. But there does seem to be a little momentum, at least, towards it, to at least having a conversation around it. But would that fully replace the gas that's now transiting through Ukraine into Europe? Unlikely, as you say. So it would be maybe a partial replacement, but it's unlikely to be in full.
And where Zelensky's denying that Kyiv's losing the war with Russia, does that stack up at all?
Well, we know that it's become very difficult for Ukraine in several parts of the country. Russia has mounted various fresh offensives. They seem to have gained some ground again, particularly in the east and the south. And these weapons are coming in from the west, but they're still coming in very slowly. And you can see that as time goes on, naturally momentum becomes a difficult thing for Ukraine to continue. And so, you know, we're 2.5 years into a war, and Russia is still holding a large amount of land in Ukraine.
All right, Bloomberg's EMEA News Director Ros Matheson, we thank you for that analysis. Fantastic interview from Anne-Marie Hordern. She managed to get about an hour with the Ukrainian president. But coming up later on the programme, the French far-right leader Marine Le Pen lashes out at her rivals moving to block her majority. We're going to take a look at the potential outcomes and the market reaction ahead of Sunday's second round vote. So stay with us for more. This is Bloomberg.
It's a uniquely global industry, and it really needs a level playing field for planes to be able to fly from one place to the next and not face, different conditions every place they land. So that's very complicated in Africa. And then there are other real hindrances, such as the price of fuel, which is actually on average 20% more expensive in Africa than in other places. So that's obviously a direct hit on the profitability of airlines in Africa. And also, I would say that taxes, which tend to be higher in Africa than in other places, although most countries do resort to some kind of taxation on ticket prices, but Africa seems to be more fond of that exercise than other places.
What are the bright spots then? Because we are seeing some airlines on the continent doing well in their own respective countries. I mean, what is it that IATA sort of sees as potentially helping the continent to get over some of those hurdles that you were describing?
Well, I think it's very much a question of how you position aviation in your national politics. If you position aviation as really a vector for economic development, that it is. Not only aviation, I should say, all forms of transportation, all forms of connectivity are vectors for economic development. And clearly, economic development is sorely needed on the African continent. So if you position aviation in that light and regard it as an ally in your drive for creating better economic outcomes for your population, then the policies that you might choose might not be the same subset of policies as if you think that aviation is only reserved for the rich.
So that was Marie Owens, Thomsen, IATA chief economist, and subscribers can head to Bloomberg.com to watch the full interview. Now let's get to some of the other stories making news this morning. Endeavour Mining has ridden a rally in the price of gold to return to the UK's FTSE 100. The miner replaces Smurfit Kappa, with the packaging company leaving the index following a merger with US rival WestRock. Endeavour makes a quick return to the blue chip index, having been replaced in the benchmark by airline EasyJet at the previous rebalancing in March. Now, to another top story, Santos shares jumped in Sydney after Bloomberg revealed that Saudi Aramco and Abu Dhabi's ADNOC have been studying potential bids for the Australian gas producer. That's as the Middle Eastern energy giants seek to ramp up their foreign gas investments. Santos has LNG projects in Australia, Papua New Guinea and Timor-Leste. And sources say that Santos could also attract interest from other potential buyers, and deliberations are ongoing. And finally, JP Morgan's chief global market strategist Marko Kolanovic is leaving after 19 years at the bank. An internal memo obtained by Bloomberg says he's leaving to explore other opportunities. Kolanovic had a disastrous two-year stretch of calls on the US stock market, staying bullish as the S&P 500 tumbled in 2022, and then turning bearish as the market bottomed and rebounded. So the bear is departing. Gandalf leaves the party. Well, we were talking about how the politics has been spilling over into Wall Street. It's a similar story here in Europe. The French elections could potentially weigh on that French bond auction at 10 a.m. The oats auction, and you'll have officials, of course, praying for solid demand. But you have seen investors hopefully taking confidence from the horse trading between Macron's party and the left-wing alliance. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Global markets on alert as pressure intensifies on President Biden to drop his re-election bid. Some Democrats now see Kamala Harris as an alternative. We'll bring you the latest. Elsewhere, Asian stocks rally led by tech as soft US economic data back the case for a Fed rate cut. And in an exclusive interview, Ukraine's president challenges Donald Trump to come forward with his plan to end the war with Russia, saying any proposal must preserve his country's sovereignty. Well, good morning. Welcome to Thursday. It's Independence Day stateside. Happy Independence Day if you're celebrating. It does mean that volumes are thin globally because US markets are mostly closed. But as we check in on the futures picture, mostly flat on both sides of the Atlantic. You did have the S&P before everybody went on holiday, closing at another record high. This is off the back of that weaker than expected economic data, buttressing the case for Fed rate cuts and setting us up for tomorrow's jobs report. The bad news is good news narrative continuing for corporate America. But if we flip the board over to the cross-asset picture, you've got the politics continuing as a theme here in Europe. Euro dollar unchanged at 107, the pound steady at $1.27 as Brits head to the polls in less than half an hour for the UK general election, and Brent trading at $86.85 a barrel. But let's get back to our top story this morning. President Joe Biden facing renewed pressure to end his re-election bid after Lloyd Doggett became the first Democratic lawmaker to publicly call for Joe Biden to step aside. And you've had several others coming out in support of the president.
I'm here to tell you today, President Joe Biden is in it to win it. And all of us said we pledged our support to him because the stakes could not be higher.
None of us are denying Thursday night was a bad performance. It was a bad hit, if you will, on that. But it doesn't impact what I believe. He's delivering.
The president was very clear that he is in this to win this. And the president is our nominee. The president is our party leader. And the president has told us, and he was very clear back there, that he is in this to win this.
So let's bring in Bloomberg's Kriti Gupta for analysis. Kriti, I'm wondering if you do see dozens of Democratic lawmakers signing this letter for Biden to withdraw, does it force his hand? What do we know?
So dozens of lawmakers in a Congress of 435 lawmakers. So I think that is the context we need for just how much pressure he's actually facing. But some significant names that are coming into mind, especially when it is kind of calling for President Biden to take a step down. The thing that unites the entire party, the entire Democratic Party, is that they're trying to avoid a Trump 2.0.
They want to win.
They want to win, and they're trying to figure out how to do this. And they're trying to figure out how to relay that message to the American people as well. And what we've seen in the last 48 hours is despite some of these calls for Kamala Harris, for example, to step up, among many, many others, Kamala Harris seems to be the front runner as that replacement. As you were saying, she is still significantly behind in the polls when it comes to President Trump. I'll give you some numbers. For example, when you look at the latest polling numbers between President Trump and President Biden, a New York Times Siena College poll showed him Trump higher by 7 percentage points, 49% to Biden's 43%. The Wall Street Journal, a similar story, 48% to 42%. The chart on your screen right now shows that very story. That red line is President Trump. Kamala Harris is green. So even though she may be starting to have better shots, again, on predicted odds, take it with a giant grain of salt, than President Biden, she is still miles away from President Trump in the polling. And this is the calculus that the Democratic Party is doing right now.
Yeah, for all those saying that it's Kamala Harris's moment, what a great chart to show. So what's at stake here?
Well, there's a lot at stake here. For the markets, it is still a little hazy about how this is going to work. The markets have largely positioned for it, mostly through the steepening of the long end of the curve. Good, Mark Cranfield earlier in the show pointing that out. But net, we are still unclear about who is going to be not only the nominee, but ultimately the president. And this is a different economic agenda than what we saw back in 2020 or even in 2016 when it felt like tariffs or oil or inflation was a very easy trade to make. Now it's a little bit less clear. What is at stake, though, is voter participation. That's the piece that I really want to emphasize, because we talked a lot about the drama and the politics around it all. But this is all about appealing to the entire American population. This is something that President Biden, even before the debate, was struggling with in terms of his foreign policy record, with his views on Israel and Hamas and how it was handled in Gaza as well. So many Democratic voters said, we don't want to vote for either candidate, and are actively voicing the concern that they might not choose to vote at all.
Okay, crucial context, Kriti Gupta, and she'll be back with the opening trade in just under half an hour's time. But let's turn to another election, France now, where the far-right leader Marine Le Pen has lashed out at President Emmanuel Macron's centrist group and a left-wing alliance. The two rivals are joining forces to try to block her National Rally party from getting an absolute majority in the second and final round of the French legislative election. Now, we can speak to Christophe Boucher, who is CIO at ABN Amro, for the impact on the market outlook. Christophe, it's lovely to have you with me on the programme. Let's just start by talking about what outcome in the French election you're positioning for. What's your base case?
Thank you. Morning. The base case is very, I would say, comfortable, but not so comfortable. Comfortable from a market point of view, from a political point of view, not so nice. But it seems that thanks to the kind of pseudo-coalition or the kind of agreements around the second round, there is a very low chance to have a majority, either by the far right or the far left. And this is a good news because this is a main uncertainty that is impacting market for a few weeks now. Especially the far left program, which is very ambitious on fiscal stimulus, while we have already a fiscal deficit around 5%. So I would say that what is coming is probably a kind of statu quo from a political point of view, a government very technocratic or in agreement for managing project by project, but not a big deal. And it could be a good news for markets.
And we've had all this horse trading between the left-wing alliance and Macron's party. We've got the last bond sale before the second round of voting coming up at 10 a.m. London time. Do you think that investors will take confidence from the horse trading?
Yeah, we can observe that the spread and the yield for France is less under pressure. We observe some easing for a few days now with the clarification of the kind of agreement for the second round to avoid having the national rally in position to have a majority, an absolute majority. So this is the quite of good news for markets. At the same time, the risks are quite asymmetric, I would say, because the real game behind this snap election remains the 27 presidential election, so that each position, each decision is taken regarding what could be the 27 presidential elections. That is, for example, for the national rally, the idea is to not disturb financial markets, to avoid jeopardizing the next election. So risks are quite asymmetric because we don't see any kind of strong easing of the spread, of the French spread. That is, yes, we observe slight easing, but we don't believe to have the spread coming back to the level observed a few weeks ago, before the snap election and the result of the European election. And we just see the risk of having a kind of drift or moderate spread at best until at least 27.
OK, and then how much stress would a downgrade by the ratings agency, Fitch, S&P, create for French debt?
Yes, there are one big uncertainty with the behavior of markets, because in France and in Europe, it's not so hard, even it's not so easy, but it's not so hard to understand what are the games played by politics in such election. But we know that 50% of the French debt is held by foreign investors, especially pension funds in US, in UK, etc., where it's not so easy to analyze what is going on. So the risk is to have some big institutional investor based potentially on re-rating of financial agency and rating agency to start to sell based on some noise, based on some bad signal, and to have a stress scenario on the French debt before the 27 election. So yes, we are monitoring exactly. Yeah. No, sorry.
I was going to ask you, do you expect the worries about the fiscal trajectory to actually influence ECB policy? Of course, we've had officials in Sintra denying that it would, but what's your view?
Yeah, the main scenario is to have a very technical government, technocratic government, or kind of not a consensual government, but something where there is no major decision taken. So it's quite good to have in a way, kind of stabilization of reforms. In a way, this is a way to have some visibility on the statu quo. So this is not so bad to this regard. But yes, the main point is at the time where the Assembly have to vote budget, we expect to have no big turmoil and noise around this vote. Very similar to what we observe in the US with a level of debt and negotiation around this. We see that markets can be patient, observing politics, playing their own games, but this is a risk, clearly.
OK. A relaxed Christophe Boucher joining us. We thank you, Christophe, CIO at ABN Amro. Lovely to have you on the programme. Coming up, we're going to go from Europe to China. Chinese EV makers holding their ground as the EU prepares to unveil sweeping tariffs. We'll bring you all the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, President Zelenskiy says that Ukraine is in talks to send natural gas from Azerbaijan to the European Union as it seeks to maintain its role as a transit country and help Western neighbours ensure energy security. In an exclusive interview with Bloomberg in Kyiv, Zelenskiy said that Ukraine, which still carries Russian gas to the EU, will not extend a transit agreement set to expire at the end of 2024.
Yes, we don't want to extend the gas contract with the Russian Federation. We don't want them making money here. This is my main signal to the government of Ukraine and to some European countries which are dependent on this gas. Because now alternative steps are considered on how we can use the pipeline with other suppliers, with a different country. There are these negotiations. If it is a normal contract, if not Russian gas would be supplied to the European countries, well, we as future members of the EU, we would have to support our friends.
Would gas from Azerbaijan, Azeri gas, be acceptable to you?
It is one of the proposals. Yes, the Azerbaijani company. But it's the government who's dealing with this now.
Ukrainian President Volodymyr Zelenskiy speaking exclusively with Bloomberg's Anne-Marie Hordern in Kyiv. Now, Bloomberg has learned that the EU is working on a proposal for import duties on cheap goods bought on online platforms outside the bloc. Sources say the move would primarily target Chinese retailers such as Shein, Temu and AliExpress. The EU currently has a $161 duty-free threshold for online purchases that's meant for small gifts or personal packages. And on other tariff news, Chinese EVs have held on to their share of the slumping European market. That's ahead of new tariffs designed to protect local car makers from lower cost imports. And we can get more now from our transport reporter in Hong Kong, Danny Lee. Morning, Danny. Just tell us what exactly is expected to happen today with these EV tariffs.
Yeah, good morning, Lizzie. So the European Union's provisional tariffs on Chinese imports of electric vehicles will take effect from today. What this ultimately means is that electric vehicles that have come from China will cost more for consumers. But just at what price point that these will be increased to still remains to be seen. We have seen the setting out of provisional tariffs already from last month, but we've already seen a little bit of a tweak to these tariffs, according to people familiar with the matter. But today, from the Commission, we will expect to see a formal publication of the tariffs and whether we see any changes or maybe no tariffs at all. That would be a surprise, but what we will see later on today will be really fascinating to watch. But in the meantime, we've still got some months to go up until November before these tariffs will fully kick in as much as money changing hands and duty being paid to the authorities in Europe. But until then as well, you've got Brussels and Beijing in talks to try and come back from this precipice of really tense tariff tensions. And so China clearly, whether it wants to give up more of its position on existing tariffs it charges to European automakers, whether Brussels wants to climb down from any of its additional tariffs, that remains to be seen. But if they don't, China will retaliate. China signaled it will retaliate on EU imports of pork to foreign cars with large engines, which directly impacts the likes of Germany, and which is why Germany has been intensively trying to help get a better position between China and Brussels.
That's really interesting. OK, so the read across potentially for the German automakers. But what does it mean for the Chinese automakers, Danny?
Yeah, for the Chinese automakers, they're still trying to find their feet in Europe. But what we have found is that already they have around almost 10% market share of EV sales in Europe. And so that has been growing steadily. And right now, though, the situation is that what happens after the tariffs really fully kick in, if they do indeed at all, the additional tariffs. And but right now in the European market, sales are still pretty anemic. And from what we saw over the previous couple of months, we are seeing sales overall pull back, and particularly on EVs, as there seems to be a little bit of cold feet from consumers. And of course, EVs cost a lot more in Europe than it does in China. So it's a little bit of a tough time for Chinese EV brands who are trying to go global here from China.
So as you say, the surprise today could be no tariffs, a lighter tariff output, shall we say. Is there a chance actually that you could see a warming of relations between the EU and China here?
I think everything will depend on what the Commission publishes today and whether we see any changes at all. And in the meantime, just the intensity of the talks between Brussels and Beijing to try and find some common ground here. It's clearly important to Beijing and clearly important to its really thriving industry, but clearly Brussels doesn't want to lose face.
All right, Bloomberg's Asia transport correspondent Danny Lee, we thank you for that update as we look ahead to that tariff announcement. We've got plenty more coming up on the programme, so do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, it is Independence Day stateside. Happy holidays if you're celebrating. But before the S&P clocked off, it did notch another fresh record yesterday. The bulls evidently in full control of this equity market. Take a look at the performance just this year. But let's dig into why this happened yesterday. You had a raft of economic data feeding the narrative that Fed cuts are on the horizon. If we dig into it, you saw US companies adding workers at a more moderate pace in June and wage growth cooling. If we flip the board over, you can see the labour demand, the easing in the labour demand. You also saw, if we flip over to the ISM services PMI data, despite the start of the summer travel season, actually broad decline. So it suggests that the engine of US economic growth is actually stuttering. So the question is, are we going to get a continuation of this narrative in the jobs data tomorrow, and therefore will we see a reaction in terms of bets on Fed cuts as well. Our economists say that Fed officials might think that the labour market's near an inflection point before a more rapid deterioration, but our economists reckon we're already past that inflection point. Now, that's the US macro story. If we take it over to Europe, we have got the French election second round coming up on Sunday. We've been discussing all of the horse trading going on between Emmanuel Macron's party and the left-wing alliance. Marine Le Pen saying that that's contempt for the voter. But how will investors react to all the horse trading? Well, we're going to take a look at that when we get the French bond sale, the last one before the election, at 10 a.m. It's the oats auction. You've had officials, of course, praying for solid demand in this auction, but you've had French yield premiums over German debt soaring on concerns of a widening deficit if Marine Le Pen's party gets into power. So will they take confidence from the horse trading? We've been speaking to, of course, Christophe Boucher of ABN Amro about that. He was pretty relaxed. He says it's going to be a technocratic government going forward in France. So that coming up on the docket at 10 a.m. London time. But the big event here in the UK, of course, is the general election. And we're going to bring you full coverage of it tonight. A special broadcast at 10 p.m. UK time, just after the polls have closed. They're going to open in just under 4 minutes' time. And we'll have the results trickling in throughout the night. You can also catch our interview with Peter Pratt, the former ECB chief economist. That's coming up at 7:30 a.m. UK time on the opening trade. So plenty more on the docket for the day. How does the politics feed into the market story? I'm sure they're going to cover that for you next. Kriti Gupta and Guy Johnson coming up next on the opening trade. This is Bloomberg.